good or bad, this new regime in terms of capital gains for property?
Look, Surabhi, there can be multiple takes on it. My personal take is simplification is always better in the long run. Indexation was kind of a rebate which the government was giving to preserve your real value of money, right? It was a compensation against the price rise in the economy. No other asset class was enjoying it. Debt was enjoying it till last financial year. It got taken off. Property and gold were the only two asset classes which were enjoying this intrinsic advantage over equities or over debt or over anything else. And I think government has done a great job in terms of getting everything at par. Will it harm someone? Will it benefit someone? It will all depend on when have you purchased your property and when have you sold it? What has been the appreciation in your property? Also, one caveat out here. Gains till 2001, as in the value till 2001 has been preserved, which means your indexation or your fair value of property, whatever it was in 2001, the computation starts from there. Till 2000, if you hold an ancestral property, then obviously you need not be worried because till 2001, your property
price has been sort of preserved.
And indexation was kicking off from there.
Okay. You know, we want to take the examples in and then I want to ask you really how this is working out. So let's get down to the math and take an example of, you know, property, let's say a property for 30 lakh rupees that was purchased back in 2009. So let's get the table up on the screen and then we'll work through the numbers to see what happens in the old regime as well as in the new regime. Remember, the example that we're taking here is a property bought in 2009 at a price of 30 lakh rupees. We're assuming that it was sold this year at a price of 1.5 crore rupees. So you're assuming that the real estate market was really good and you got a great deal when you sold that property. So now let's see how this works out. Now, in the old regime, you have indexation. So therefore, you have an index cost. Basically, the 30 lakh rupees has been bumped up to bring it up to speed with inflation. And the index cost, going by the indices of, the inflation indices which are there, comes to about 73.5 lakh rupees. This is the index cost. How much have we made by selling the property? 1.5 crores. What is the index cost? 73.5. So you just subtract and you come to the gain. The net gain is about 76 lakhs 42,000. The old regime was taxing this gain at 20% with indexation. So at 20%, the tax liability is about 15 lakhs 30,000, give and take. Now let's come to the new regime where there is no indexation. So this is not applicable. There's no index cost here. The sale value is 1.5 CR. Originally, we bought this house at 30 lakh rupees. So the net gain is 1.2 crore rupees. That's a huge amount. But the rate of tax is less. It's 12.5%. So the actual tax liability is about 15 lakh. Now, in this example, you'll see 15 lakh, 30,000, 15 lakhs. It's not too bad, Mohit. I mean, just going by this example, it seems that why the hue and cry? Why is there so much heartburn? Because it doesn't seem to be making much of a difference. What am I missing here?
Surabhi, the magic and the trick lies in your sale value, right? Out here, you have assumed the sale value is 1.5. For someone, it might be 3, it might be 4. For someone, it might be lesser.
True.
And whether you are benefiting from this regime or the regime is harmful to you will totally depend on your sale value. And perhaps we can take that.
So let's take some more scenarios. Yeah. So we'll do that. Let's take the example of someone making outsized returns. You know, maybe we'll just put those numbers up here where the gain is like, 3 times, 4 times, 5 times. So this is the second example.
Perfect.
Which we are saying, again, same thing, 30 lakh rupees property in 2009, sold it this year, but at 3 different price points. 3 times gain at 90 lakhs, almost a 5-time gains at nearly 1.5 crores and a 7 times gain at 2 CR. So now we've got 3 different variations. So now how does it work?
And the scenario is totally different for all these 3 buyers, right? So if you have sold it at 90 odd lakhs and just made 3 times your original cost, you are actually benefiting, you were actually benefiting in the old regime. In the new regime, you are paying higher taxes.
7.5 lakhs.
And that will hurt. That will hurt
That's
a lot of investors.
Compared to about, 3 lakhs plus.
If your property hasn't appreciated much, Surabhi, then you are actually under stress.
Okay.
And if you're going and selling that out, right? If your property is appreciated by almost 5 times, this is roughly, this will tend to amount to around 10% odd IRR or 10% annualized return. If your property has delivered about 10% annualized returns, you will be flattish. you have
okay,
neither
almost
gained nor
14.5
lost.
lakhs of
You
tax in both.
almost equal under both tax regimes. And if your property has given you outsized gains, then you also gain with this budget. So that is double bonanza.
Okay,
basically.
okay. So the 7 times over there, if this property has gone up to over 2 crores, 7 times appreciation, then here the tax outgo is 22.5 lakhs in the new regime.
Absolutely.
Earlier it was over 27 lakhs.
So if you're lucky with your investment, if your investment has appreciated beyond 10%, you're also lucky with the budget. Your taxes will also be lesser, right? So the trick is if you're making more than 10% IRR or annualized returns, you're actually ending up paying much lesser in the new regime.